Hello traders, hope you are doing well. Welcome to the new M15 trading series, where in this specific video I will be talking about the M15 trading plan that I'm using. There's a few things that I want to talk with you before going into the charts. So in this video I will be using this diagram, which Matt used multiple times, made multiple videos explaining all the variables, market phases, entry models, when to look to trade, when we shouldn't look to trade, explaining all these annotations. Okay, so the goal of this video, want to be clear, is not to explain all these annotations and all the market phases. Essentially, I won't be repeating myself because Matt already did an awesome job, and it doesn't make sense for me making a video about that. The goal for me with this video is simply to try to explain how I'm using the trading plan based on this diagram, using the M15 as my entry time frame. So in terms of the M15, this should be by the way, a very simple video. I will make reference during this video, but it will make much more sense once you watch the live charts analysis. You start noticing how I'm trading as well when I share backtesting videos, trade recaps, markups, analysis on Discord. So if you are watching this video and you are not taking advantage of the Discord, yeah, I highly recommend you, because that it will be where I'll be just posting daily stuff about this strategy. So M15 and my trading plan. I usually, I use the daily and the H4. Okay, I'll just put here to be a little bit easier. I use the daily and H4 as my main time frames, like high time frames. Okay, where I find the direction, where I find the high time frame ideas. I use the H1 as my medium time frame. Sorry guys, medium time frame. And I use the M15 as my low time frame. Okay, these are the time frames that I currently use. Daily H4 as high time frames, H1 medium time frame, M15 low time frame. If you notice, is exactly the same, and that's why I won't repeat myself on this diagram, because it's exactly the same how we trade on the M1. The only difference is that I jump time frames. Okay, so instead of having medium time frame M15, I have low time frame. Instead of being high time frame, this H4 or H1, I have H1 as medium time frame and the daily as the high time frame. So it's basically just jumping time frames and doing exactly the same thing, but this will give you a much more hands-off approach, much more scalable. But I don't want to talk about this in this specific video because it will be make this video very long. So going straight to the point, these are my time frames. So for example, on this diagram, okay, let me just use this. Imagine this is the H1. Okay, let's combine H1 with M15. Okay, this can be the H1 or H4. This is not a big difference, it's just a time frame lag. At this point, when we have let's say about H1. So when we have an H1 change of character, okay, what do I expect? I expect a pullback of this H4 leg. After the H1 give you a change of character, and I'll look for possible pullbacks. So I draw my POIs, like Matt said here, medium time frame. I draw my POIs mainly on the medium time frame, which is H1. Once price mitigates the POI, I look for the M15, which is my low time frame entry. So it's exactly the same as you guys do. So basically, as price mitigate the medium time frame POI H1, I wait for the M15 development to show me the entry model is ready. I'm waiting for M15 change of character, M15 liquidation, M15 extreme or decisional POI to be formed, and then I get involved, okay? I'm not be sitting on M1, I use M15, and on M15, I need to see all the entry model being present. So let's continue. H1 chalk, the high time frame pullback is likely to start. Price moves down, mitigate the H1 POI. I used an M15 entry model. After the entry model and we have alignment again on H1, I have a confirmation that this low is likely to be weak. And you can see that I'm using H1 majority of the times as you guys use M15, okay? I'm sitting on H1 a lot of the times. So after H1 chalk, okay, and mitigate the premium of this internal leg, I understand that this low is weak, and now I'm trading the complex pullback, the bearish complex pullback of this high time frame leg, okay? Price goes down, again, mitigate H1 POI, looking for M15 entry model. Like Matt said on those on the previous videos, and I said I won't repeat myself, but I use a lot of refinements, and you should as well, to classify what is a strong POI. Okay, flip, sweep liquidity. This is not the goal of this video. I'm just explaining what I'm doing. So on H1, I am expecting the price to mitigate H1, and I expect M15 entry model to present itself to then play the sells. Once price mitigates again H1 demand, and by the way, we can have H1 inside H4, so that increases the probability if you have an H1 inside an H4 POI, but it's not needed, okay? It's the same as M15. M15 inside H4 increase the probability, but for example, when we are playing this kind of order flow, H4 is not enough. There's not enough H4 price action to develop to assume that M15 is inside that H4 POI. So what I'm trying to say is you can just follow the M15 order flow a lot of the times with your current strategy on M1, and it's the same for this one. I can still follow this H1 order flow a lot of the times, even though it's not inside the H4 POI. And again, this will make much more sense once you watch the videos about live trading and backtesting and all markups, trade recaps, all that stuff, okay? So price mitigate the H1 POI here, that if it's inside H4 is even better. I can look straight away on M15, okay? This is when you can use a little bit of discretion or have rules around this, which is, for example, when the zone is very distant, or when price action mitigates something on the left and you are not quite sure which mitigation is going to hold. Instead, even though price is mitigating an H1 POI, you probably wait for an H1 change of character, okay? Like I said, it's the same. Remember, on M15, you don't always trade M1 straight away. Matt said this multiple times. Depending where we're coming from, you can wait for an M15 change of character to give you extra confirmation that this demand, okay, is going to hold and price will follow through. This is the same with H1. Instead of waiting for an M15 chalk, in this case, I'll be waiting for an H1 change of character if I'm not sure. After H1 change of character, again, I wait for an M15 entry model. I'm not waiting for any kind of M1 price action. I hope you now can understand this is everything the same. I just jump timeframes, okay? So H1 chalk, M15 entry model, look to get involved. Price push up, push down, okay? Imagine this is H1 leg. Price mitigate H1, regardless is inside or outside H4 POI, I'll be looking to get involved on M15 entry model. M15 entry model presents itself, I take the trade, then I have this leg, okay, to play with, and I have this as my H1 leg. Price mitigate H1 POI, M15 entry model again. If I'm not sure, because imagine the lows can be formed through equals, or we have high probability H1 POIs below. What you can do is wait for an H1 choke, and after H1 choke, you have the confirmation to get involved. And here I'll be waiting again M15 development, because M15 is my lower time frame, okay? And I'll be waiting for an M15 entry model to present itself before looking to get involved. I hope you guys can understand that this is very, very similar. I'm just using high time frames, okay? And of course, with the ongoing support on the Discord, I can't emphasize enough, this is very important. The ongoing support on Discord will help you to, of course, understand much better with trade recaps, markups, and analysis. So, like I said, price can just continue to go up, and this high is weak, okay? Not like I said, but like Matt said on previous videos, after internal structure is in line, okay, with the swing structure. It's not the goal of this video, but you know the high is weak, so I can expect this high to go. So then price can pull back. This is H1 leg. I mark the POIs based on all the confluence, okay, all these confluence, the POIs, and I mark the H1 POIs that I'm interested. And once price mitigates into those H1 POIs, okay, for example here, I will be looking for M15 entry model, okay? You wait for the liquidation, i.e. if there is no lead, you can wait for the entry models like the fake break, the equals, like you have a lot of things to play with, but it's all they all need to be visible on M15. And I want to make this very clear. I will never, or at least 99.9% of the times, I won't go lower than M15. Okay, this is like M1 for me. I don't use lower than that. Okay, and that's it. This is everything the same, but with high time frames. I also want to talk about something that I get a lot of questions, and maybe is a little bit make everything a little bit more mechanical, which is good, and is when to wait for an M15 choke, when to wait for an H1 choke. Okay, it's the same question we get for traders that trade the M1. When do I go straight away to the M1, or when I wait for an M15 choke as extra confirmation? Okay, so to solve that problem, there is a few things that you can do, but again, every piece of price action is unique. It all comes down to high time frames, where we're coming from, what price is rejecting, if the objective you're trying to play is still valid. You always need to ask these three questions. In this case, something that can be like a nice framework for you, if you are interested in this method, is if it's pro trend H1 and H1 order flow. For example, this is H1, okay, pro trend H1. So high probability POI here, I can look for an M15 straight away. But that's not a rule that you need to follow, because when the market, for example, mitigates something on the left, there is a lot of, and this is like a daily mitigation, and we have an idea that this low can go. You can wait for an H1 choke as extra confirmation, but the rules is, if I will write down, if it's PT H1 and H1 order flow, you can use M15. M15. Okay, and the reason why I like this, and again, this will depend, of course, how mechanical you want to be, because I don't actually follow this 100% of the times, because price action is unique, and I have enough experience to know when to be more or less aggressive. But this is a very good starting point, because if, let's say, I'm looking for a POI here, okay, and this is the H1 or H4 leg, like is PT H1, this big leg, sorry, and then we have the H1 change of character, okay? So what you have, H1 swing leg is bullish, and order flow after this change of character is bearish, okay? So you have bullish swing, bearish order flow. Let me see if price, imagine this is a POI that you want to trade, because it's high probability, all those confluence. Let me see if I can use M15 straight away. So PT H1, yes, so I can use it, okay? Because it's within the leg, it's pro trend, I'm looking to get involved. Again, I'm looking to sell from this POI. Let me see. PT H1, no it isn't, because I'm looking for sells and the structure on H1 is bullish. So H1, so but it's PT H1 order flow, yes, because like I said, after the H1 choke, order flow is bearish, and now internally we have this bearish order flow. So this POI makes sense to look for M15 straight away. Again, this will depend on a lot of different variables, but it's a good starting point for you to use as a reference, okay? When do I wait for H1 chalk? No matter what, I wait for a H1 chalk no matter what. If just use here, if it's CT, counter trend, H1 or and M15 here. In this case, 99% of the time, I wait for an H1 chalk. Okay, why? Stop trying to call the reversal. This is not a sustainable way to trade, and especially if you are not consistent yet. Just think with think with me. You have in an entire move, okay, in an entire move, that price is going up here with these legs, okay? You have probably 1, 2, 3, 4, 5 continuations that play out and one that doesn't. In terms of reversal, you have one that fail, 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 one that work out. Okay, I prefer much more to be on the continuation side, in line order flow, than trying to pick the reversal. So in this case, when it's counter trend H1 swing and not it was a mistake, H1 order flow, sorry guys, CT H1 and H1 order flow. So structure is bullish in this bullish leg, and order flow, you can see like I draw here, is bullish, okay, is bullish. So I won't be looking to justify some valid supply here and enter on M15 straight away, trying to call the reversal. I want to wait for actually H1 change of character minimum. This can actually be not just H1 chalk, it can be an H1 internal boss if you are not sure, okay? Let me just use, just to be clean for you guys. So this is very, very important. I hope it becomes clear, and the reason why continuations in 5 examples 4 work, 1 doesn't, compared to reversals that in 5 examples only 1 work. So to solve this problem, I create the rule that if it's counter trend H1 structure and H1 order flow, I'll be waiting for H1 chalk. Okay, I won't be looking straight away with M15. If you guys find this confusing, just think with me, because this is exactly the same as you guys approach M1 and M15. Okay, imagine that this is M15. Okay, and price break structure and M15 continue bullish. Will you be looking to trade a reversal on M1 straight away? No, you don't. At least I hope you don't. You will be waiting for an M15 chalk, and then you play the reversal. That's exactly the same I'm doing, nothing different. That's why I said in the beginning, I will not be explaining every variables again and the notations, because it's all the same. On M1, you wait for an M15 choke, and then you wait for an M1 here. It's the same for me. I wait for an H1 choke, and then my lower time frame is M15, so I wait for an M15 entry model. Okay, it's everything the same. The only difference is that this will give you a much more hands-off approach, and I will talk more about the advantage on M15 in the next videos, but yeah, that's how I've been using. So guys, back to the diagram. I want to make extremely clear the entry models that I'm using, the liquidity entry models I'm using, on the entry models itself, the variables. So yeah, just stay with me with this diagram. It will help understand everything much better. Okay, so liquidity entry models. At the moment of this recording, I'm using this entry model, the number 1. I'm using the number 2, okay, and I'm using the number 4. And you see on the M15 process and data video that these are the ones that I am more confident, have all the stats, I know how it works, I know all the variables, so this is the reason why I'm very confident doing this and executing these models. Okay, I know it works and I have data to show me that. So in terms of liquidity entry models, these are the ones that I use. In terms of entries, is like this. Okay, I explain here. If the flip swap liquidity, I take the flip. If the flip did not swap liquidity, I take the extreme. Simple as that. Don't need to overcomplicate. Okay, so let's go to liquidity entry model number 1. If the flip swap liquidity, I take the flip. If not, I take the extreme. If the flip swap liquidity here, I take the flip. If not, I take the extreme. The same goes for here. I'll take the flip if it's swapped. If not, take the extreme. And the same goes for the last liquidity entry model. If the flip swapped, take the flip. If not, take the extreme. Okay, it's very simple. I play these variables on all entry models. In terms of what I classify as a sweep of liquidity, of course, I have the very clear models that we can see on the high probability trades that are the clean sweeps of liquidity, right? A clean sweep. However, I'm a little bit more aggressive and I use a buy to sell, sell to buy weak range or wicks, right, to confirm some sweeps of liquidity. And I'll explain with a chart example. Okay, it's not complicated, it's a little bit more aggressive, and sometimes it can give some more trades and probably can give you more winners and more losers as well. So it's down to you. It's just a variable I'm using. No need to use it. You can stick to the most simple ones that are these ones. Okay, but yeah, if you want a little bit more frequency, yeah, I just say that this can be a variable to include. So I want to tell you how I'm doing. So let's go to this example. Again, don't need to overcomplicate. It's very simple. And I'll show you here. Okay. So we all know that this is a flip because this demand is significant and broke this internal structure. So it's significant enough. Okay, this is the change of character. Okay, and basically this is the fail reaction. Sorry guys. Okay, so what I'm going to show is, yeah, how I'm seeing the buy to sell, sell to buy wicks as possible sweeps of liquidity, and how I'm using that. So it's basically just reading lower time frames without going to lower time frames. I'm just using that experience and not need to go to lower time frames. In this case, for example, I don't need to go to M5 to understand for me that is a flip. That is a sweep. Sorry. So In this case, like I said, price mitigated demand, push up, swap this, okay? For me, this, like I said, weak range, swap that weak range and go down. For me, this is enough to classify as a sweep. Why? Because I know that if I'm going to M5, this is a very clean sweep of liquidity, okay? So it's basically just reading low time frames without going to low time frames, okay? So this is what it means using wicks, right, to classify sweeps. Nothing more than that. Very simple. You don't need to use it, yeah, straightforward. So in this case, price swap liquidity, this POI is already mitigated, so you can stick to this one, and eventually price end up going to the downside. Okay, so this is I'm using. So going back to the diagram, this hopefully is now very clear that I'm using all these models, the entry model itself, that swap, and what is a flip, that swap liquidity for me. Okay, I'm using the very simple rules, like I said, but I also, okay, the very simple rules, but I'm also using these ones. Okay, of course with time we'll see more trade recaps, so I don't think you guys will be overwhelmed by this method. It's very simple, and yeah. So in terms of a new variable that I'm using is, and the reason why I'm using, and I want to explain why, is if there is no H1 lead, I wait and I search for M15 lead as override. What I mean by that, on H1, okay, sometimes imagine that a range on H1, okay, and this is very high probability range. It's very likely that it will hold, okay, but the price action is very tiny, it's very close to each other, so there's not enough development to see H1 lead. So when there is no H1 lead, essentially before I develop this method, you have to use these models, okay? So you have to use an M15 equals, right, or a fake break, okay? But when the price action is very close to each other, a lot of the times M15 won't give you such development. Price action on M15 takes more time and probably just mitigate something here and continue up, okay? Don't be here hanging around for too long. So something that I use is, if I like the zone, if it's high probability zone for me, I'm happy to be a little bit more aggressive, and if there is no H1 lead, I search for M15 lead to confirm, and it's exactly the same approach, okay? The only difference is that I'm using M15 lead instead of H1 if I really like the zone and if there is no H1 lead, okay? So yeah, I use M15 lead to confirm the zone. It's important that the lead that I use on M15 should be significant. I like flips, sweep zones, not buy to sell, sell to buy, weak ranges, okay? I want to see a structure low or a structure high, right? I want to see significant price action, something visible on the M15, not weak range, okay? And I'm going to show you another example on the charts. Hopefully it will become even more clear. So let's go to H1 where it was okay, here. I'll show you an example here. For example, we have this sweep range, price swap the high, move down. I want to play M15s from here, okay? But I know that there is no H1 lead here. So as override, I can use M15 lead to confirm the zone. In this case, I know if I go to M15, you guys are going to see that there is this kind of equals, okay? So in this case, we both reach the same conclusion, even though without this variable. But just focusing on this variable, okay, I want to explain that it needs to be significant. What I mean by significant M15 price action, you need to be visible, okay? Not weak ranges. So a flip, right, in this case, or a flip zone, some significant structure, high or low, okay? Sorry. So in this case, it can be here, okay? I'm not going to the entry model again, but you can see that the change of character will happen here, okay? And then price continues to the downside. I'm just focusing on the M15 lead, okay? I have another example that I want to show you, which is, I think it is on GBP/USD. Okay, it's here. Okay, again. So basically, looking for longs from here. I'll not be doing item frame analysis, okay, for the sake of the video being too long. But you know that when this equals here and when the price goes down, internal is shift bullish, never took out the low. This high is likely to get run. We have this kind of buy side liquidity here. So assuming the high is going to get run, I'm looking for buys. And I have this POI. And let me just use VAR replay. You can see that there is no H1 lead, okay? So because there is no H1 lead, I'm using M15 lead, okay? So M15 lead, this for me is significant enough. You can see a push down, push up, some kind of flip here to the left. So it's significant. The same, we have the change of character here and the PBL. At this moment, we have the change of character and PBL completed. You just mark the zone that you want to get involved. Okay, I'll just put here 5R, which is something that I I always do. So, but what I'm going to tell is, want to show you guys is the fact there's no H1 lead and I want to get involved, okay? And because I use M15, I want to have another variable to be a little bit more aggressive. And in this case, price swap this M15 lead, okay? Sometimes this won't happen and I missed a trade, but it is what it is. M15 is a little bit more conservative, okay? Price end up tapping to the zone and then continue to the upside. So this is why M15 lead can be powerful, and yeah, it's basically when I'm trying to play a zone, right? Imagine that price now going up, going down. I want to play a POI here, and there is no H1 lead. I'm confident on the POI. I'm happy to be a little bit more aggressive. Use M15 lead, okay, and search for the entry model here. So it's basically all the same, but instead of sticking to item frame lead, I'm using M15 as an override, okay? So yeah, hopefully this is very clear by now. Again, if you have any questions, please let me know. Give me your feedback, and yeah, hopefully in Discord things will become more familiar, and yeah, we'll be more confident executing this style. So see you guys there. Bye.